We have our next management ready, though, insurer, Nigel.
Well, that's right. Let's get straight to conversation with Girija Subramanian, the chairman and MD at New India Assurance, who joins us on the show. Hi, thanks a lot for joining in. Well, before we get to the numbers, I wanted to compliment your team because personally, madam, I'd reached out to a couple of times to your staff and they've been very, very helpful. So on a personal note, quite satisfied with the service. And thank you so much for the support. That said, let's focus on the numbers then. The gross written premium and the net earned premium in FY25, that grew by close to around 4%. While the industry, I think, was growing in early double digits. What is the growth outlook on both these two parameters for your gross written premium as well as the net earned premium for FY26? If you could give us a sense.
Yeah, so basically last year growth was not up to the market. For the first half of the year, growth was pretty muted and we were lower than the industry growth rate. But in the second half, we picked up and I think we were with the industry growth. And in the last quarter, we exceeded the industry growth rate. So, it had a lot to do with, I joined New India in June. So almost for the first quarter, there was no leadership there. And after that, the growth was pretty muted in the first half. So I think somehow throughout the year, there has been a mixed bag. And for the industry itself, it has been a muted growth last year. Now, going into the future, we are very much prepared and to achieve at least a double-digit growth in the next fiscal. We have got our strategies in place and already targets are fixed across all lines of businesses. And we are well within our targets. April and the May growth rates are an indicator that we are well on our targets and we'll be achieving at least a double-digit growth rate if we go this way.
You want to give us a number? Double-digit, early teens, mid-teens, late teens? And will you outgrow the industry?
Early teens is what I feel is definitely possible. And my personal ambition is it should be somewhere in the mid-teens, if not better than that.
Got it. Let me get another number out of you. The combined ratios have come down sharply in quarter 4. I think it's come down to around 111 from around 119.
Yes.
For FY25, I think on an average, it was roughly around 117. What's the target for FY26?
Yeah, we want a downward trajectory for combined ratio for all the years now. And obviously, I would definitely want a much lower combined ratio. We are working very hard on our services, on our systems, on putting SOPs, on strict timelines and TATs for all our claim settlements. And with all these systemic improvements, I am sure that combined ratio will come down with increased emphasis on underwriting guidelines and more accountability at the employee level. And asking all our regional offices to be more focused on creating a profitable balance. I think all of this will result in definitely a downward trend in the combined ratio in the future also.
Ma'am, good morning. Again, here, is there any target set internally?
Target set internally has been always in the range of less than 110. I want a less than 110 combined ratio is what the target is, but the journey can be. It depends on various factors, it's both internal and external. So yes, if you ask us a personal ambition, it would be something less than 110%.
And of course, the journey is dependent on so many factors, and you'll be able, in your opinion, you'll be able to get to it by when? Which quarter, by the end of the year? What's your sense?
On what?
The 110 number, the 110 target, combined ratio.
It would be a combination of increased our thrust on the retail lines. I think that would be one of the most important aspects. If you are able to achieve the retail expansion in a big way, which we have planned, if that happens, I think 110 would be more achievable on that score.
Your net earned premium, ma'am, grew just 4%. Total income grew just 1%. Despite that, the underwriting loss reduced by 31%. Operating profit grew about 1.35 times. Could you tell us what led to that?
No, actually, the underwriting losses came down heavily because of a lot of systemic improvements that we have done across all lines of business. And one of the reasons why it's come down is also selection of risk, which there has been an increased emphasis on selecting the right risk. So we have been refusing a lot of business also, which is not doesn't make sense to us. Is not viable. We have not written them. Therefore, the growth also is muted in a way. So I think these reasons have also added to the combined ratio coming down, the underwriting losses coming down heavily this year.
Okay, all right. Ma'am, I wanted your view on another topic. There were reports that suggested that the government is considering merging the three PSU general insurance companies into New India Assurance. Have you heard about the same?
No, these are rumors which we keep hearing. There is no definite proposal as such that I know of.
But
So I really can't comment on it.
But if it does come into play, wouldn't this be a big negative for New India Assurance? Because your solvency, your combined ratios as well would be under pressure, isn't it?
Actually, the other three companies are also turning around, and in the last year they have turned around, and they're doing much better than a year ago. So it depends on how much they turn around this year, whether they are able to come back into absolute profits, bring down their combined ratios. It's all a measure of that. It also depends on the timing when, if at all, there is a merger that is going to happen, and if at all it happens, then the timing of that merger is very important at what stage. Yes, the other aspects of whether this will pull down New India is something that everybody will surely deliberate on, and I'm sure without taking due caution, no such decision will be taken.
Is there any plan for OFS, ma'am? Any discussions on? I mean, the government would like to sell some stake?
No, as of now, there is no such instruction from DFS.
Okay. Just one more operational point. On the motor side, rates have not been revised for 4 years now. We put out a story saying that, the government the industry has been making appeals for a while now. Is it likely to go through?
Yes, the indications that we keep getting from time to time are that, yes, they're considering it and it will go through, and I hope it really goes through, because the motor TP as a line of business is getting increasingly unviable, and it's mandatory, so we cannot stop even doing it. We have to do it. So in the scenes, I am sure that we have to, the government has to step in and revise the rates to a stage where it becomes more sustainable.
And if it were
it is long overdue.
And what would be the minimum required in terms of these rates going up? Because it's not happened for so long.
I think the workings have been given and they're quite extensive. They have been given to the government.
Okay. And in the ballpark, what would you want is what my question is. I mean, of course, they'll have to decide.
Actually, see, now our combined ratio, our ICR for TP has gone up from 96 to 108, around 12%. And if you want to add some operational viability into it, and also the inflation and etc., then I think 15-20% is minimum that we would expect.
Okay, and as you're saying that, I really hope that it goes through.
That is wishing. If wishes were horses, then 15-20% would be minimum.
Minimum. All right. No. Well, we'll see if it does indeed happen. But thank you so much for explaining all of that to us, our viewers. It's a real pleasure to have you with us this morning, ma'am. Appreciate it.